It is officially on. Nobody can deny it right now. We've got Michael Saylor from MicroStrategy actually swapping his Bitcoin into US Treasury bonds. We've got Solana crashing down to $60 a token. This is hand in glove, the same levels that Kaspa's up since the 2023 low. Today, we've got a very special video put together for you guys. As you know, the community considers our Kaspa trading tactics to be second to none. After all, we were the first YouTube strategy to introduce this trading style where we're utilizing FOMC meetings and all this central bank data. Look at how effective this has been in trading Kaspa. You can't compare any technique to it. In today's video, we're going to do a deep dive into bear market trading tactics, how to protect our valuable capital as we reach these market lows, and we're going to be able to give you realistic projections all based on Fed document. As you guys know, we try to link every single talking point that we make to central bank documentation. A lot of it, Michael Saylor is clearly reading because Bitcoin is on the way for continued downside. You guys recognize the stochastic oscillator similar to RSI. Look at the 1 week. A really easy way to simplify how this overpowered indicator works is when the stochastics is at the top of its range, price is high. When it's at the bottom of its range, price is low. Now, we can get a lot of insight when it's transferring from lows to highs and vice versa. Look at this. It's at a high, it's at a low. There's a dip. It's at a high, Bitcoin's at a peak, it's at a low. Bitcoin's at a low, vice versa. So we've been recently at a low, we had a rally, and now the stochastics is transitioning back downward. We're headed to a low. Now this low can get deep and it can be prolonged. For Kaspa holders, this has suddenly validated Kaspa's long-term value. Comparing it to Solana, $20 a token was fair price. We were trading Solana throughout 2023 around $20 a token. For Kaspa, that was about 1.5 cents. That'd be fair value for Kaspa, comparing it to Solana. So really showing the value of Kaspa. Now that everything's capitulated and we're clearly in a bear market, we'll be able to give our Kaspa projections similar to this one. You guys remember this post we made on X? This was released only in our VIP group. This isn't the kind of thing you want to publicly announce. Now, I want you to think for a minute. All these guys who do deep dives into the tech, all these guys who do deep dives into the team, into the social hype around Kaspa, all their predictions. This is a falling wedge. It's going to break out. Huge bounce. The number one tactic is always, and we'll take this to the test. Anyone who wants to challenge this, we'd love to do a challenge. On October 10th, 12 hours before the Morgan Stanley crash, we predicted Kaspa would be in a bear market until Powell retires. It turns out Kaspa's kind of a thermometer for the broader altcoin market. Looking at Solana, ever since that date, guess what? It's been in a bear market. And there is continued lows to be established. Every different project has a different bottom. Then we have consolidation, and then we have upside. So let's look at this like the glass is half full. We have an extended period of time to accumulate our long-term hodl positions. And we're going to show you something that the Kaspa community is really going to dig. It's a new project called Octra. Not a lot of VC token involvement, not a lot of big unlocks coming from market makers. Very community driven, running on Raspberry Pis, and right now it's almost the pre-sale after the pre-sale. So this is an interesting project, just like Kaspa, released right at the bottom range of a bear market, just like Kaspa was in 2022. This could be a great hodl position in the privacy sector. Very much aligns with early Kaspa. When we go a step deeper, we're going to see that we can use all this macro insight to get even more predictable market reactions. The key here is, if you're gainfully employed, great. You can just continue dollar cost averaging. But of course, for that guy who's making 200, 500K a year, they want to push their risk. They want to swing trade once this bear market comes down a step and catch some bangers like we've been doing over the past 120 days. So what I've done for everybody, since this February 6th market low, which was a jobs report, I've gone over every single post, even if we were just putting it on the radar, but we never executed. Every single project we've covered, gone over all this data. How much upside did they have? How much downside did they have? What sectors were most bullish? And now we have a market-based analysis to show some of the best trading tactics for inside a bear market. From the top, holding cash is the same thing as short selling. Somebody was just asking, hey, I've got like 200 Tau. What would be the best way to increase my Tau position? Members inside VIP, remember, we've been putting together this giant trading plan that was based around what? It was based around that PPI data. Remember, we called it finding the next SIREN, right? Using macro insight, we recognized, hey, PPI data, this has everything to do with the market downside, like to the day, to the dollar, every drop off, including that key pivotal moment on Bitcoin's chart right here, where it bounced into the 200-day SMA. Look at that. So we're talking about 3 points of resistance. The 200-day SMA, the January 30th PPI, and we've got the May 13th PPI. Now, our original trading plans that were going to include breakouts on bio right here, that's May 13th. That's right when Bitcoin's sitting on that 84 line. Had that inflation came in super low like it did here on April 13th, starting this whole shindig, we would have gotten a rally. Bitcoin would have gone higher, but that inflation came in super high, stopping the upside in its tracks. Now, you guys remember in the prior live streams, I was kind of saying, well, we should have been leaning away from swing trades. Our relief rally hypothesis has been invalidated. It's my responsibility to take a firmer stance on that. Now, while a lot of our durable goods trades, which was the last entry we could have possibly taken with macro data supporting it, these held up. Most of them. Zama ran into that news. Remember Zama, they had some court case that locked up 12 million. That's been reversed, but nonetheless, happening 24 hours after a bullish print, that stopped it right at its all-time high breakout. Octra did have a brief dip, but it's still right at that durable goods print level today. So even though The bullish hypothesis was invalidated here. The relief rally was canceled. We were running on fumes and we expressed that. It's my responsibility to emphasize that more, and that comes in to our checklist. Now for VIP members, we're gonna go one step farther, and I'm gonna show you actually the process for how we put together on the radar for Allo, for example. This is something in VIP we were looking at because the macro data didn't support it and because of the overall bearish trends. I felt that we shouldn't have put together a buy, but for everybody in the group, I wanted to put it in front of them. And since we posted about it at about 19 cents, it rocketed to the upside. For VIP members, I'm gonna extend this Excel spreadsheet, really flesh it out, and show you the process for how we find these banger trades, how we search them out, and then how we vet them down. SIREN, right now, is a top candidate. We've got some trades unlocked from inside VIP, despite the fact the labor market print on Friday, and let's talk about that for a second. One of the keys to swing trading in a bear market, and this will roll over to the bull market when it finally comes, is we've got to wait for the macros. In the event you're entering a swing trade and it's not on the day of PCE, FOMC meeting, FOMC minutes, jobs report, or PPI, or a durable goods, you're top blasting. Now there's a little range. If those come out on Friday, you could enter that Sunday or Monday. You have like a 48, 72 hour range. In the event you are not buying on the day that print comes out within that 72 hour window, you are essentially top blasting. You are taking on an insane amount of risk. This is based on statistics. You can actually back test this on any chart and see, yup, that makes a ton of sense, because these are all the major pivot points. Just like on Kaspa, these FOMC meetings were all the major pivot points. Now we'll get into those in a minute, because this bear market we know has another leg down. Guess when it could all start? Thursday. Notice how PPI has had everything to do with the downside, including the invalidation of a break above the 200 SMA, all connected to PPI. PPI is happening on Thursday, guys. In the event it comes in high inflation, it's going to be a tumbler. We'll be setting up short trades inside VIP. As an American, I can't short sell. There's no platform where I can do it. Coinbase, those contracts are terrible. They're like closed on the weekends. They'll kick you out when you're winning. It's absolutely bonkers what they're trying to sell as leverage trading. But for everyone overseas, we'll be breaking down the sliding scale for when we want to do short trades. Now here's another possibility. It comes in low inflation and we get a dead cat bounce on Bitcoin, a dead cat bounce on the total 3, but for specific strong runners like SIREN, I had just made a VIP post about why we're holding SIREN, and I'm gonna break that down in a minute. And then I was like, oh, we're about to start the video on why we want to hold SIREN, and it's crashing below $1, but we bounced right back up. Super good. Anybody holding SIREN, smash the like button. We've got some unlocked VIP posts where we were, 1, planning SIREN for the labor market print, and then 2, even after the labor market print came out bad, we were like, yeah, let's go for it anyway, because it didn't sell off. And that's exactly what's behind this recent breakdown. So we've seen this before, guys, and it happens a lot with inflation. The consensus for this jobs report was very misleading. What did the sliding scale say before it came in? It looked like it was going to come in bullish, right? They were thinking non-farm payroll, which is new jobs. Last month it was 123. They were thinking it was going to be 85K. That's not bad. We'll take it. Plus, U6 unemployment, which is very specific to AI, that was projected to rise. So we were like, okay, let's get ready, wait for the data. Here's an event where waiting for the data, which is part of this checklist, find and wait for key macro data should be on the checklist. It will be in the fleshed out version in VIP, where I go over my process on how we keep finding these banger trades. We'll always have a trade that's going to be running to the upside in front of you like a top 3, top 10 banger. We've got to have the discipline to wait and only enter at this handful of macroeconomic events. It appears the market makers and the institutional investors by Wednesday realized, hey, the labor market print is going to come in solid. That's going to sway the Fed. Now we're looking at higher for longer rates. The bonds, just like Michael Saylor's jumping into, the bonds are going to be paying big money. When the bonds are going to pay big money, it just absorbs liquidity right out of the market. This is the bond yield. So right here, February in 2020, it drops off like a cliff because of lockdowns. The bull market ensues. Once they start hiking this back up to the day, to the dollar, that's the top of the altcoin market, right in November of 2021. So as this bond is rising up, it's just like November of 2021, right here. Bonds are rising, it's just sucking liquidity out. And this is going to go on based on Fed information for an extended period of time. In all honesty, this is good for Kaspa because they've got a ton of time to build. Here's something else from central bank documentation. The Bank of Japan rate hike. The Bank of Japan is getting ready for another rate hike eventually. When that sets in, it'll be bearish for altcoins, and that can mark a final market low. This is a head and shoulder pattern, as clear as day. It's actually a low right shoulder, which is the most bearish version. The average downside is 70%. At 120 a Bitcoin, 70% downside, you're right around 40K per Bitcoin. That's how bearish it's going to get. Michael Saylor and the bond market are all about that. Now there's a possibility this next leg down will be over with on Thursday with high PPI. How do we know that? From these top 5 points, specifically this one. Find the key macro data. And this one's all about PPI as we've shown on that Bitcoin chart. It's been PPI all day. Now, we might get a bullish PPI and avoid the crash, just prolonging it. In the event that happens, it'll be the FOMC meeting on June 17th. That's the next major catalyst for a market dump. Japan will have the opportunity to hike rates the night before on the 16th of June. In the event they hike rates, That's going to be the dump signal. That's going to be an entry into shorts. Now, for altcoin traders, the good news is the market's going to fall 3 times as fast as it climbs. Once we get to this bottom, we'll start being able to enter into these new long positions, like SIREN. Did you guys check out the troll video we did when we broke down how Pepe started running to the upside right here as soon as Kaspa broke to the downside? Why? Because inflation was hot. Meanwhile, there was a bunch of excess liquidity from all the quantitative easing. Right now, there's an abundance of liquidity from all the printing since the government shutdown, since the Morgan Stanley debacle. And there's high inflation, meaning there are unique meme coin-like projects that are ready for huge rallies, and SIREN definitely fits that bill for a project that can have an outsized rally. There's a lot of talk on social media saying it's troll. Troll is the #1 meme coin. Troll's great. I've got nothing against troll. Here's a fact. The #1 meme coin of 2026 is SIREN. It's just a fact. This went from 4 cents to $1.25. When we look at the wallets, it's mind-boggling how stacked these wallets are. Take a look at this, you guys. I'm going to zoom in. This is, in my opinion, showing heavy institutional investment. The top 50, so that means there's 50 wallets bigger than these that are like in the 13 million tokens. So the top 50 is worth over $10 million US. Look at the size of this. It's 10 million. So that's right now $14, $15 million US per wallet. And there's 50 of them. Also, the entry to get that position, it wasn't like these guys threw 50 grand down, 100K even. To get that wallet, you needed to buy $1 million worth, roughly. So these are big dogs. We've already gone over the study of how market makers set the bid-ask spread, kind of the corruption or shadowy realm of crypto. Because those wallets are so stacked, SIREN, this theory represents it has a place in the meme coin Mount Rushmore, up there with Shiba, in order for those wallets to distribute out. Therefore, a big rally's coming, potentially 2 all-time highs, and then it's going to hold an elevated market cap for an extended period of time. So those wallets have the opportunity, and those wallets, they're the boss. They run this market. They are an extension of bankers. They have to have an opportunity to distribute. Take into account the last 2 rallies have come from PPI. Then we got a downside from PPI at May 13th. So the jobs reports and PPI have been the most bullish factors for SIREN. This week is going to be a huge catalyst. Now, I want to show you something. I don't want you guys to sell out without all the information. This PPI print right here, we're looking at the chart and we think it must have been bullish. It wasn't. It was bearish. We have that inside our trading journal. So just like SIREN wasn't negatively impacted by this labor market print, it didn't sell off. When we look at the March 18th PPI results, it was super high. It actually wasn't out of control. It was a little bit lower than the last month and a little bit above expectations. So it wasn't incredibly high. It kind of was. The month over month was 7 and last month was 5. So it was just flat out high. So that's very bearish. And as you can see, our sliding scale, the results came in saying, hey, this is bearish. But SIREN broke to the upside anyway. For any traders in VIP who scooped this up with yesterday's post, like I did, my opinion is just let it run. There's no use just taking 1x double up. Yes, Strong Warrior, absolutely, it's too late for SIREN. One of the concepts that we've gone over and something that I'm drafting in a more fleshed out format is swing trading tactics. And this isn't based on my opinion. I've gone over every single post we made, whether there was a confirmed buy based on macros or not. If it was just on the radar and we never executed a trade for it, technically doesn't matter. We studied all of these posts, gathered a bunch of data for bear market trading. One of the things that we found out is taking a moon bag at a double up is an ineffective tactic. The average upside is going to be 3 to 5x. Now for projects like, let's take Bio for example. Bio is something where we only got a double up, but if we're looking at from where that breakout originally started, the April bullish PPI, it's about a 3x upside. We got in after one iteration up right here at 28. Then there was a neutral jobs report, created a double top. Then we got that bearish PPI, the one that ended the entire relief rally scenario. Remember, Strong Warrior, how I was expressing to you specifically, there is a possibility for a weaker relief rally, but because that PPI was so bearish and because it's such a apex of resistance, particularly on Bitcoin with the 200-day moving average, the January 30th PPI, and then now again PPI, these would be higher risk trades. It's my responsibility to make a more confident stance on that and just tell everybody we got to back off. We don't need to be throwing big position sizes in because the relief rallies, even for BankerBot, which survived the durable goods post, or Octra, which was dipping down for a minute, but it's right back to our entry level on durable goods. Unfortunately, Zama had that news, which really slowed it down with the court freezing. Absolutely. One of the rules of thumb, Strong Warrior, is just to be patient. In the event we're not entering on the day of one of our macroeconomic events, we don't take the trade. Now, there's like a 72-hour window, right? Sometimes they're released on a Friday, there's a dip, and then we can enter on Sunday. Within reason, all of our trades, and this is going to be inside this guide that we're breaking down right now, and I'm going to get into the next part, which is combining with technical analysis, swapping and late entry. We just don't do it. The risk is too high. It's not in our favor. We're protected from SIREN had we gotten in yesterday with the breakout post. We're at 84K. So the risk reward to letting it run is there. Otherwise, we're taking on too much risk, and we don't need that, particularly this close to the market bottom, because that capital is becoming more and more valuable. So absolutely, we've got to sit on our hands. And that's fine, because guess what? There's going to be another event on Wednesday and Thursday. All right? What's the number one trending trade? There'll be other opportunities for you, Strong Warrior. Absolutely. Let me show you something that's trending right now. one of today's biggest gainers that can potentially set up for upside, right? Block Street. Ideally, we'll get a pullback and a cool off on Block Street, and then we can go ahead and confirm an entry with bullish CPI and PPI. So we don't want to trace these trades. We only use these macroeconomic catalysts, and there's plenty of them, man. There's going to be plenty of them. Not all of them are a hit. Some of them are going to come in neutral. Some of them are going to come in bearish. We wait until we get a clear shot, and this is going to drastically increase our opportunity for success. So there's another round of trades coming right up. To answer your question, just wait. Absolutely. If you guys are in VIP, you guys can't even imagine how busy I am, but I am interested in doing one-on-one conversations. Send me a DM. I'll be going through all the older DMs and answering them. And we can engage in bear market tactics, what we're going to do, and getting ready and embracing the fact that we're just waiting for Bitcoin to take another leg down. There's a high probability that leg down comes this week. Look at that, PPI. It's just like written on the wall. That inflation comes in hot. It's all over, baby. Come barreling down. It varies. CPI and PPI prices in at varied rates, depending project to project. So like looking at Tau, for example, the strongest, these are PPI levels on Tau. So as we can see, those key January 14th and January 30th levels, they created support and resistance. Those two arrows are jobs reports on Tau. Now for Tau, the number one catalyst is labor market prints. Every time it breaks out, it's a jobs report. So it has these downward trends, and then a jobs report will break it out every time. Now what happens with these jobs report is they're released on a Friday. When a print is released on a Thursday or a Friday, it can have a delayed reaction, impacting the market that Sunday as the DXY reopens. With CPI and PPI, it's a combo. They're going to come out Wednesday and Thursday. In the event they're both really bearish, it can happen right then. Right on the spot. Some of it has to do with how clear the signal is as well, because if it's a very clear signal, then it impacts the DXY. Then the trading algorithms start to adjust and reprice everything. That's why we get these fake outs. Like, remember this call out on Tau? The jobs report was on Friday. We had everybody, including in the live stream in VIP, we were waiting for that labor market print to come in showing low numbers, and it did, but they were super low. So everybody suddenly thought, well, they're actually too low, which is improper thought pattern. What actually was happening was they came in so low, it was impacting the trading algorithms with the DXY, caused a weekend over the dip like it so often does with Tau specifically, and then the breakout started on Sunday. So depending what we get, looking recently on SIREN, May 13th was the PPI. CPI was Tuesday. And when that PPI came in, it was hot. And it dropped that evening like a rug, like a bad habit. It completely tanked. But on this PPI, which was released on the 18th, it did not rug instantly, and it waited until that Sunday DXY reopened and then rocketed to the upside. Now, right now, SIREN seems almost immune to market conditions. Everything else dropped, but it held its own. Therefore, this can continue its upside regardless of PPI. That can be an accelerator either way. Obviously, it'll be better if it's just bullish. Let's take a look at the PPI consensus right now, because they have the best economists in the world going over this data. Now, PPI is the harder hitting of the two. They're going to come out in a pair. CPI, which is consumer inflation, and then PPI. Can you guys see these numbers? Let me zoom in here. This is headline PPI. It looks like it's going to come in lower. So last month with 1.4, this month 0.8. Let's take a look at the month before. So we had April 14th was super bullish. Oh yeah, May 13th, it was super high. So April's was super low, and then May was super high. So it's been going back and forth. Let's see what it was before April. It was about, headline was 0.5. They thought it was going to be super high, but it came out low, and it was even lower in core. Core is equally as important as headline. We'll build out an entire sliding scale inside VIP like we always do. And it's incredibly accurate how these sliding scales show us what's going to happen in the market. Example, the last event that happened, durable goods. One of the key outlooks that this sliding scale had was Bitcoin dominance was going to dump. That was a key point from that durable goods. And since then it has. May 28th. So the Bitcoin dominance has significantly crashed since the durable goods predicted so. We'll have a sliding scale going over everything. Let's take a look at some of our target projects so we can rationalize when the best time to buy is. Zooming into the 1 week statistics, CFG, great RWA project, is starting to oscillate to the downside. So we want to back off adding to this position. While it might be tempting to do a bounce play at any of the up and coming macro events, we want to think big picture. When we're putting together all this data inside the more fleshed out version, I'm going to go over a concept called the keeping count. Right? We've got to keep count of this entire 45-day period of macroeconomic data. What about the month before? How's it impacting Fed policy? At what point do we have a consecutive print showing high inflation or low jobs that's going to pivot the Fed's policy and make a higher impact reaction? This PPI is starting to trend so hot. With a few more hot PPI prints, the Fed's going to have to do something. That's why they put rate hikes on the table. Now, in the event the Fed starts hiking rates, that 40K Bitcoin prediction that we went over, that becomes very realistic. And the extension of the bear market will continue. Will Walsh being in charge change the PPI? I hear that the Fed can choose what is picked and what is not to report. They decentralize the data, so it's handled by the BLS. Throughout the government shutdown, the BLS was showing what I consider massive corruption. What do I mean by that? Let me explain. For one, they disrupted the entire schedule. On this total 3 chart, we've got PPI reports. They completely disrupted it. The government was shut down, so they didn't have government workers to collect PPI data, which is then rolled into the Fed. There are macroeconomic speakers, like guests on InfoWars, for example, that believe there's corruption in the data. Like right now, they believe they're showing strong jobs to support the current White House, when actually the jobs are a lot weaker than they are. The corruption with the BLS, they were changing the schedule at the last minute. And they were separating CPI and PPI. And they did this because what has been the #1 bearish driver, PPI, all these red arrows. This one on January 14th, it was a surprise event. Meaning, at the last minute, guess what? PPI inflation. We couldn't even set up for this in VIP because it just came out of nowhere, taking retail traders off guard. And they did surprise job reports. They did all these surprise events. Now everything's back on schedule, which is good. That's debatable. How much they can take into consideration? Definitely. And their approach to handling it, they can look at the high inflation and say, well, we don't care about high inflation. It's not a factor. We're micromanaging it. What we need to do is start stimulating the economy. That'll actually help fight inflation. So there's different policies that they can take. Is it possible for Walsh to use a different policy? Absolutely. He absolutely can. Is he going to? Probably not. Looking at the Kaspa chart just to see how baked in inflation is, the reason why we put 12 cents, subscribers to this channel know the 12 cents, the May 15th trend line, this is one of the reasons why people in the Kaspa community consider this tactic the most profitable. We've blown everybody out of the water, not just by using the FOMC meetings, but by studying the policy change. They threatened a huge tariff inflation policy change here. They made an even bigger tariff-based policy change here. We were able to trade both of those. But there's so much inflation baked in. They were still working on inflation from lockdowns, you guys. They didn't even reach the 2% target. And then came tariffs. And now comes the conflict in the Middle East. Just pigpiling inflation. It's out of control. That is why Michael Saylor has pivoted into bonds. Because bonds are going to pay big yield for an extended period of time. And this is going to just vampire Bitcoin. Yes. Okay. So what I'm seeing here is the bio trade. It sounds like, and we're going to formalize this and get it inside VIP. And of course, we'll release it in videos and go over it. You've got to only enter a trade when there's a macro print that supports it. So there's the entry for VIP was here and here for bio, clearly. Any other trade, that's a late entry. For that, you have the opportunity to stop out here at the May 13th high PPI or stop loss. If you've got a trade that's doubled up and now you're back to your entry, obviously we want to implement stop loss tactics as that downside starts approaching. I mean, as a given. By only entering at a macro catalyst that's projecting upside, we're good to go. Now with River, we're seeing some chop. This is market-wide downside chop. We're testing the low end of its range. Is that a wide swing? Yeah, River makes wide swings. Would I be nervous? Would I swap this out? No. You're gonna wait for the bounce. There could be a bounce this week with PPI to get you out of that trade, back into cash, even. It's not like River's gonna go crashing down to $3 and stay there for a quarter, right? You're bouncing around macro outcome. What you just got hit was an early sell-off from the jobs report. Part of my responsibility is expressing after that May 13th PPI print came in hot, we've really got to back off our swing trades. The relief rally was over then. And you guys remember, as we were going over possible swing trades, I was trying to express, guys, the relief rally's canceled. I should have, in hindsight, taken a stronger position on that and just said, why don't we back off, wait 30 days, let the downside happen. Now we'll have juicy swing trades. Downsize in position in the meantime. Of course, there's always going to be a few runners like Aloe, SIREN. I wouldn't be worried about River. River's going to be fine. At the FOMC meeting or the FOMC minutes, the Fed might declare, hey, we're going to start printing more. This River position's okay. But bio definitely didn't follow one of these rules that we're going to just put together for everybody. Let's move on to the next sector, which is Here's the thing about the May 13th PPI print. In the original draft I released, I said, and you probably read this, short sell Bitcoin, sell everything, move into cash. For whatever reason, error in thought, we pivoted out of it. Now, for guys in the VIP, and we'll unlock this for the next live stream, you guys remember the finding the next SIREN setup? Like every single altcoin was focused on that PPI print. You remember that setup from the April 13th spike? So it was do or die right there, guys. And it was die, which means we need to, and there are times when we want to back off and short sell. Now, as Americans, we don't have access to short selling. So by going into cash, we're short selling, right? There are times like when the market's crashing like this, we just got to back off. You just got to back off. There's no way around it. I also launched a troll at 2-cent post, but I deleted it for some reason right after. I was going to release it in the morning, but by the morning it had already rocketed. But that's my responsibility to, I should have made a more firm stance on we need to back off. But as long as you follow the rules, what were our target swing trades on durable good? Banker bought, Octra, where we had a dip but we're right back, and Zama. Unfortunately, Zama got hit with that bad news story and it started downside. You could have gotten into River too. You could have gotten into Nas. These aren't devastating lost positions, and they are ready for a quick rebound recovery. You could have gotten into Nas too. For a late entry at the durable goods. So you're relatively fine on those. As long as we follow this guideline and we only trade those dates, we'll be fine. Now let's combine it with some basic technical analysis. For one, we've got triangles, cup and handles, things along this lines. For BankerBot, this should have been our clear go-to. It had one of the most defined patterns. There's this bull flag. It had a 4-hour swing low stochastics. That's key, showing it's got upside potential. Let's look at near. Near is something that we didn't aggressively make buying plans for, but we did mention this cup and handle down here. Once it flipped that from resistance to support, big breakout, showing how technical analysis is going to add another layer to this. SIREN, right? There's this clear triangle. Now, in order to classify this, you could say, well, isn't it a descending triangle because we have that original February support line that it's kind of been using? When you say that this is a symmetrical, or excuse me, a descending triangle, you need 3 points of contact on each wall. So it's not a symmetrical triangle. It definitely fits falling wedge, which happens to be the most bullish, which averages upside of 150 to 250. Which is putting us around $2 in either case. Yeah, even in the worst case, plus 150%, we're going to around $2 here, based on technical analysis. So using technical analysis with our macro outlook is going to give us huge insight. Like right now, we realize, hey, Michael Saylor selling Bitcoin. Look at the 1 week stochastics. It's clearly trending down. The fast line is dropping like a bomb. In the event this PPI comes in bearish, it's going to have another leg down. So if you guys are not American citizens and you're like, you know what, I'd like to do a short trade, the best entry would have been the May 13th PPI. When I chickened out and didn't put that trading plan up, but we should have. And this is all teachable stuff, guys, right? That's one of the key points that I want to get across to you is nothing that we're doing in VIP really revolves around my opinion. This is all based on Fed data, textbook technical analysis combined together. So there's a right and a wrong answer. It's easy for me to bring up the Fed data or bring up the technical analysis because I've been using it so much, but in no way is this something that, like an artist, like only I can figure out. Absolutely not. This is something that everyone you can utilize systematically. And yeah, there is a lot of help from robots. Absolutely. How do you think we came up with the Bitcoin dominance was going to drop on May 28th? That little piece of the puzzle. Yeah, a lot of it's done by humans, but the robots know everything, particularly when you've been training a robot. MYX, this was one of the worst call outs I think I've ever done. One of the key points from that is we did emphasize wait for Friday, right? We can get a starting position, and I ate that one too. MYX is having a lot of challenges. Oh, it's starting to rally back up. I would hold this for PPI, okay? Because you can get right back up and out with a bullish PPI. I'm gonna show you part of my process for why I selected MYX, and then I'm gonna tell you why you should peel out of it. For one, we didn't get the bullish jobs report, which would have been fine. For two, and this is gonna be in VIP, whenever we see a key macro date, like a tradable event, what you wanna do is get onto CryptoRank or CoinMarketCap, and what you wanna do is find out the trending projects, and then you wanna find out the trending projects that are gaining. Now, what my process is I screenshot these, and then I vet all of them. See MYX? It's trending. It's a top gainer. This is why I incorporated it into Friday's trading plans. And I even got an early position myself, which was dumb, which is breaking rule number 1, which is we only enter trades on the day of macros. Otherwise, we're top blasting. Like example for Troll. If you were a major Troll fanatic, you could have gotten into it when we bought Bio, right? Right around this FOMC meeting. This is when, remember, IP was trending, Billions was trending. So there was a case because Bio, because Billions were both trending, that Troll, because it's an IP meme coin, it would break out. Or this is the May jobs report rally. So if you were late for Troll, like we got into Troll here at 5, we always want to wait for a bullish macro event. Up here, do we buy Troll? No, that is a mistake. Just like buying MYXC and that trading plan that I made to get a little bit in early and then wait for Friday, that's a mistake. We're not following our system. We're exposing ourselves to too much risk. Someone asked, should I buy SIREN now? Is it too late? Yes, that would be a mistake. So you get the May 13th, and it survives that for days. But then right before the durable goods, it dumps. Then it rallies. So the correct entry, you could have tried Troll here on May 28th at the macro event when it's gonna have upside sentiment, right? It had supporting data. Then you'd be cool because, hey, it didn't work, no big deal. I didn't take a loss. Or even in a worst case scenario, like it's not connected or you didn't pick the right trade or it gets bad news suddenly on chain, you're not gonna get a huge loss, right? Even if it blows up in your face. So with MYX, wait, this is what I'm doing. Wait until PPI and CPI. You get a bullish event and this is gonna rally to the upside and then you can take profit out. Mega blow, you can send me anyone who took the MYX trade and you wanna get a refund for this month, I feel responsible because this was against our thing. I'll give you some refund on Patreon because that was a trading plan that's against our school, our system. So just dumb by me. I don't know if 40, I mean, it's pretty cheap anyway. I don't know if 40 bucks is gonna make up for it, but wait for PPI and then you'll get an exit chance, probably 30, 35 range. Yeah, that was pretty dumb. And this is why I'm fleshing out this swing trade checklist. You know how we have the vetting checklist? This will just make sure that we don't overlook something, we don't get caught up in the moment, and we don't make a mistake. So we also want to use technical analysis, right? We're going to combine our macros with our technicals. Whenever we get a big win, That is from supportive macro data. What we don't want to do is then cash out and go immediately into a new trade. We want to wait, for one, for future macro prints, back to rule number one, and two, for a pullback, something along those lines. Patience is always going to be key. The best setups, all the best trades that we have, we're able to play it out days ahead of time, even weeks ahead of time. That's why I wasn't super aggressive or bullish on the aloe on the radar post. Chart was showing bullish signals. The stochastics were all in position for upside. The fast line was leading the slow line. It looked good. It still looks good. Everything was right, but wasn't supported by macro data, and it was something that had just popped onto the radar through the process. We didn't really have time to vet it. Ended up being top trade of the day. Yes, you can get a free month, Rizzy. Just send me a DM. If 47 bucks is a big deal to you, and you feel like you got into the NYX trade because we said get some early position on it, definitely send me a DM. And we can give you a free month. Okay. I'm going to go over some of the other results. These are since February 6th. Every post we made, whether it was confirmed entry, just on the radar, whatever. Strong Warrior, that's a great question. To finish my sentence and then jump back into the comments, for 250 market cap and above, every trading plan that we came up with was either neutral or bullish. And that's without even confirming macro data, just every post ever made. So once this low comes in, if you want to use leverage, push the risk, higher market cap trade setups, when aligned with macroeconomic factors and a bit of technical analysis, these are your bread and butter. When you're going into DEX projects like Uniswap, something that's only on a few exchanges, during a bear market like right now, you want to stay 50 million market cap and above. When you get into these 10 million, 5 million, in a bear market, they're just not going to rock it. On a statistical basis, there's just too many of them that look great. Like Moltbook, for example. I don't believe we ever executed a trade for Moltbook, but we were looking at it. They just tanked. Also, launch pads in a bear market, not super bullish. Projects like Bio, Clanker, they might get some upside, but it's very short-lived because they're launch pads. They're looking for a bull market environment, right? They want to play off of all the new listings, all the retail activity that we are not going to see for a while. Yeah, and the trades since February 6th have all been good. If you had blindly thrown a $100 bill at every single trade that we launched, you'd be up 26%, and that's not selling at the absolute top. That's if you had just held. I've got all this Excel information, so the average sum of all of our callouts has been good. And studying that is important. Strong Warrior, to answer your question, when is Bitcoin going to reach that 37K bottom? And there's two ways to look at this. From the technical analysis standpoint, and then from the macro central bank policy interaction. For one, we've got this 1 week stochastic. This is something that we often use inside VIP to time when it's good to enter the market and when it's not. I'll give you an example on the total 3. They adjust policy here in January. We get downside here on April 7th, the exact market bottom. For this inflation consolidation, the 1 week stochastic bottomed out 1 month before the Bank of Japan carry trade. So right around the range of the bottom. We're undoubtedly waiting for this stochastics to reach its bottom range and then reevaluate there. It can start as early as this week. All it's going to take is a hot PPI print. In the event we get a dead cat bounce here, it can be delayed. When the Fed makes their address to the nation, it's going to be so bearish. They're going to be saying, hey, jobs are stable. The Fed's dual mandate, which all of crypto uses as liquidity support. When Satoshi built Bitcoin, it was a tool to use against the central bank. And that's why I'm just shocked. We're one of the only groups that uses central bank insight in detail to trade crypto. And this is part of the reason why it works at such an outstanding level of accuracy. There's a high likelihood that the next move down starts this week with PPI. All we need is a hot print. It can be delayed until the FOMC meeting. That can be paired with a Bank of Japan rate hike. That 40K range, Gareth Soloway, master of technical analysis, completely different approach, has said in multiple videos, he's got his extreme bottom for Bitcoin around the 35K range. So he's right in the range that this head and shoulder pattern is showing. We've got the textbook studies, similar to the study I was just telling you guys about, where we go over every single post, scrutinize all the insight. Doctors, mathematicians build these technical analysis projections by doing the same thing. They just look at hundreds of charts, define the patterns. This is clearly a head and shoulder pattern, and it has a low right shoulder. The lower right shoulder is very bearish. It's one of the more bearish setups for this head and shoulders. Now the average downside is 170. Once the bottom's in place, it can go on for an extended period of time. As bond markets continue rallying, as long as they're going to be paying big money on bonds, as long as there's the possibility that the US Fed can hike rates like they threatened at the last meeting inside the last minutes, it can stay at a depressed state consolidating for an extended period of time. The next leg down is very close, in my opinion. In the event it's not at PPI, it most likely will be at the next FOMC meeting, the FOMC minutes, and then we've got a whole nother round of data. And as we've seen, these PPIs are just the high impact event that we've identified. We had kind of already established that in VIP, right? We had built all of those finding the next SIREN trading plans around what? The April PPI. So we had definitely highlighted the importance of that data point. Therefore, the next leg down should be correlated with it. And eventual rallies back to the upside when long-term PPI starts to dissipate, starts to cool down. Yeah, so definitely it's too late to enter SIREN right now, but there will be this other event on Wednesday and Thursday with CPI, PPI, where there's a whole nother roster of projects for active swing traders. There's also, for people outside the United States, the opportunity to get ready to short sell. Good question about cutting losses. Obviously, the best time to have done this would have been at the May 13th PPI. It's a difficult trade to make, but it's the correct trade to make. They snuck up on us, and the dump happened before the jobs report, not after, which occasionally can take place. Otherwise, if this unload was happening right now and over the weekend, like it usually does, we could get out of the way, but we've already eaten a lot of loss. Just like our entries, we don't want to cut out until we get macro confirmation. So the jobs report move has already taken place. Now we've got CPI and PPI, which the consensus, the economists are projecting, it's going to be bullish, which will give us one of those dead cat bounce scenarios. It's definitely possible. That will be a better opportunity. Now there's something to say for what projects are we going to just hodl? What projects do we want to hold because they're near the bottom of their range? Like they're not going to go a lot lower. CFG's in that category. Zama's near the bottom of its range. Let's take a look at the statistics here. So we're at the one-day swing low. It's always extremely tempting to sell when you're at the one-day swing low. What we want to do, just from a technical analysis standpoint, is wait until we're at a one-week swing high. And what that's going to align with is supportive macro data. River, definitely we don't want to close that out. That's at its bottom right now. That can bounce up, that can rally at any time. River particularly, it's not going to go any lower. Looking at bio for an example of a project that was originally profitable and then started turning a position that I had. So we're starting to pick up bio here. I'm just nibbling it, just splashing around. Get a bigger position here, really go for it. So we get this huge rally. Now this was a macro-based double top. So the jobs report failed to make a new high. And that was a neutral jobs report. This is something that should have started flashing warning bells. But remember, we had built up to that PPI report on May 13th. This was the last hurrah for altcoins. The relief rally was still intact. It was still possible. All we needed was low inflation and everything was gonna rocket. We could get above the May 15th inflation line. We could get trending upward. This was gonna be huge, right? Didn't happen. As this started to drip down, I just cut it. You want to have a stop loss, particularly when you booked gains, trapping some of those gains. So with CFG, the big entry was April 8th, the FOMC minutes. And then we got this, so we're right back around that range. If you wanted to free that capital up, waiting for the next downside, I would wait for PPI, CPI, see if you can get an uptick, because you don't really need to free that cash up to make a swing trade on PPI. We're running on fumes right now, guys. It's running on fumes. Just like we were talking about how we should have really took a stronger stance as to the relief rally didn't make it. We need to stop now and wait. I mean, that's increased now tenfold. So you would be getting capital out to wait for a bottom to come in and then get CFG lower or take an different swing trade. Utilize PPI as we're running on fumes for that upside to get your exit. And in the morning, CPI comes out on Wednesday. If it's not bullish, neutral, or better, that might be a sign, hey, PPI is also going to be bad. Then we get PPI, and that's the final marker. If it comes in bearish, then you can close it for sure. Makes sense completely. When Kaspa will rally is also when everything is going to rally. And it's a ways away, guys. Remember this post that we made on October 10th. Nobody on the internet, in the Kaspa community, in the altcoin community, was thinking we're in a bear market until May of this year. Particularly for Kaspa, which is one of our stronger, more predictable charts because it's so aligned with Fed data. Projects that are really correlated with FOMC meetings, they're really very easy to read through our FOMC studies. This is really just the beginning. Powell retires, now we're at Kaspa's low. We still have a consolidation phase. Looking at the Bitcoin chart, for Bitcoin, we're here. We still got another leg down and then months of consolidation. Now, Kaspa kind of runs on its own clock. So the bottom is in. Waiting to see for a Bank of Japan rate hike, particularly at this meeting, or talks of one for future rate hikes. And is the US going to hike rates? That'll mark the all-time low. About 45 days after the United States hikes rates, or Japan does, that'll be the all-time low. And then we've got, and that can happen this fall even. And then we've got an extended period. The Fed's own words. That's what everybody wants. And that's what I got. The Fed's own wording says they're expecting tariff inflation and COVID inflation to be gone by 2027. That's in a document. We've highlighted that somewhere. I don't want to dig it up right now because I don't think I could find it. Therefore, they need to get rid of the inflation before they can stimulate the economy. You see what we're getting at here? This is like their final hike right there. Either the US hikes or Japan hikes. Somebody's going to hike rates because inflation's rising. Inflation's what's going to cause this next upside. Probably going to be a hike. And they can get away with it because jobs are so strong. The Fed is projecting in writing Q2, Q3, 2027, all inflation will be gone. Now, they'll start to lean into that beforehand. So we're looking at early Q2, late Q1 of 2027, we'll start this action. We'll start this mild consolidation rally. And then parabolic breakouts afterwards. And that's what the Fed's got. This meeting and then the up and coming minutes is going to have even more details all about that. More about Bank of Japan, more about the Fed, and we always give these really juicy summaries of the FOMC minutes. These are really helpful. Let me see in the last one if we had anything like that. They said they would cut rates in the event the jobs were in really low, but the jobs are high. So rate cuts just got thrown out the window. Oh, here it is, right here. Found it. Okay. If you guys want to read about what we've been talking about, pull up the FOMC minutes and go to page 8, paragraph 5. I'll link it for you. So page 8, paragraph 5, right here. And you can read all about it for yourself. What it says is this. Long-term inflation outlook. By the end of next year, inflation will be close to 2%. Participants anticipate that high energy prices, so this is the conflict in Iran, would continue to put upward pressure on overall inflation in the near term. The vast majority noted an increase in risk that inflation would take longer to get to 2%. And we've got oodles of good information in that document and the one before it and the one before that. Just that's really constructing the framework. By reading these, by staying up on point, we can really build a model that has a foundation aligned with Satoshi's vision. We are battling the central bank here, guys. If we were in a boxing match, we'd be watching all their old fights, figuring out all their combinations, all their footwork, their best punch, which is exactly what we do in VIP, which gives us a huge edge over the market. We'll be putting together a detailed checklist for bear market swing trading tactics. Key rule: we only want to take an entry when there's an aligning macro date. And of course, that rabbit hole goes extremely deep as we can connect Tau with the job reports, Kaspa with the FOMC meetings, River with the FOMC minutes, etc. If you guys are interested in studying a new listing, take a look into Octra. Very interesting stuff. They'll be mining it soon. Released in a bear market, very community driven. It's got good VCs, but there's not a lot of VC unlocks, if that makes sense. Definitely a good project to pack a hodl bag. SIREN somehow is actually the #1 meme coin runner. Some people don't classify it as a meme coin, but it's in position to get lodged in the top 50 market cap for an extended period of time. And this is its opportunity to do so. Yes, here's some of the scoop on Octra. It's only available on Uniswap. Cut and dry. This is almost a pre-launch, if you will. Now, there was a private pre-launch for very sophisticated investors, VCs, insiders, right? They valued Octra at 200 million market cap. That places it at about 33 cents. That's why we put on the thumbnail 33 cents. Somehow, it got revalued and launched only on Uniswap. Now they've got incoming these Raspberry Pi nodes, and they're also going to run them on MacBooks. Kaspa used to be run on Raspberry Pis. You could mine Kaspa with that way back in the day. So what I'm seeing right here is a lot of correlation between the original Kaspa launch, very community driven, and the Octra launch, which is only on Uniswap right now. Community engagement. Part of our 24-point checklist, step number 28, is we advise our group members, hey, open a Twitter account and post some of your trading plans. You can even post iterations of the trading plans you get from our group. Just don't say, hey, we're reposting Jesse's stuff. Make it your own. That way you can engage with the community. You can see, hey, when I make a Kaspa post, I get a bunch of likes. When I make a post about render, nobody cares. What I've noticed, and what you can notice using that step 28, is when you post about Octra, people care. People interact with that. Here's another interesting fact. Octra is constantly showing up in the trending projects that have gains. It's not on here today, which is where we find a lot of our runners. River's up there. It's a trending project with gains. There's more exposure. You can find this on CoinMarketCap. This is something that we're going to set up for VIP. For PPI is Block Street. This is an RWA project. The volatility on this thing is insane. And it has its biggest moves after PPI prints. So in the event we get something bullish on Wednesday and Thursday, people who missed out on SIREN can try this out. And remember, downsized position, we're just running on fumes here and we're getting ready to tank. If you're not an American and you can short sell, I would suggest doing it. Yeah, so we've got some decent VCs here. These are some top tier VCs on the project. Here we go. They're not bad. This FHE encryption, this is a big deal. DARPA is studying this in detail. So the key here with Octra is the incoming catalyst. Once they release their Raspberry Pi nodes and their MacBook Pro nodes, this can be a lot like the HNT miner release, because this is going to create a feedback loop into Octra. Payments are going to be rolled back in. So that can be a massively bullish event for Octra. The fact that it's only on Uniswap sets it up for parabolic moves too. The liquidity is so thin right now. We were down fairly low, 55 million market cap, and there was one buyer that did 50K. Right here, this guy bought 50K worth, and it just ripped to the upside. The wallets are fairly well stacked and distributed. It's really a tech-based project. I've got it all summarized here. The nodes are on Raspberry Pi. There's no exchanges right now. The holder count is growing. The wallets are well distributed. There's low VC participation. There's no big VC unlocks. There's over 60% of the tokens in circulation right now. Zama has only 20%. They're doing this bootstrap liquidity growth phase right now. So this is kind of like a pre-sale. It's like a public pre-sale. Now that private round with sophisticated investors valued it at 200 million. What are they thinking? They might be onto something. The community is engaging. It's tech-based. There's parabolic risk to reward. In the event this becomes a big privacy tech, let's say that initial valuation, 200 million market cap, in the event that held and then it was listed on major exchange, they would have listed it at half a B. If the insiders are paying 200 mil, it would have launched at half a bill. And then moved to be a major privacy player. Tech and innovation are the primary catalysts. And this got a lot of engagement for a low cap. So definitely worth checking this out. It's using this new hypergraph technology, kind of even looks like BlockDAG. It's obviously not based on speed, it's based on privacy. But they found a workaround where they're using all these nodes simultaneously, similar to BlockDAG, but just for privacy. so they can encrypt it more, right? The encryption is so deep that you wouldn't be able to do it unless all the nodes have to guzzle this encryption at once. Otherwise, you're hit. Now, what are the risks with this technology? Can it handle huge load, right? What happens when the volume gets cranked up? Is it going to be like Ethereum in 2021 with gas fees and everything? Can this hold? Who knows? We'll have to see. So there's obviously some risks, but there's a lot of reward too. Yeah, of course, Zama is absolutely a strong project. It's one of the top fully encrypted projects, meaning it's using kind of that block DAG format just for privacy. Now, unfortunately, Zama was involved in a court case where they were like, well, we don't like this privacy. We're going to lock up $12 million contract. And then they did that right after the durable goods print. So we're like, okay, durable goods, this is going to impact this extension of AI for BankerBot, for Octra, and for Zama. Octra and Zama, very closely related. It was bullish for Octra, but Zama had this court case. 4 days later, they removed the lock. So, kind of suspect news around Zama. It's in consolidation. This can explode to the upside. Now, downside risks that differ Zama from Octra. You do have Coinbase. You do have Binance with Zama. But you've got a lot of token unlocks coming. Yeah, you can put Octra on a cold storage, Tangem, or any cold storage wallet. You can absolutely do that. It's on Ethereum. I have Octra in cold storage. All right, guys. So we're just building an outline here. We're going to have everything, including my process, which takes hours and hours every day. Where we're finding the trades like Allo. If you guys are in VIP, by now you kind of realize we're always finding bangers. Right? Like right after Jobs, it was Allo. We're going to go over the full process. A lot of it was included in the how to find the next SIREN trade, but we're going to go one step deeper. And a lot of this is to protect against mistakes. Mistakes like when we're like so bullish on a project like Troll, we buy the top. You can simply avoid that. There is no way possible that following this rules, which is really basic, you could buy the top on Troll because the macro data wasn't there. You just simply wait for a macro print, read the data, connect it to the sector, and then execute the trade. So huge event Wednesday and Thursday. It could undoubtedly be the next leg down. It could also be a dead cat bounce that for specific projects will give a nice rally. SIREN's one of them. And we have got some time. According to the Fed, you've got the document right in front of you. Where it says long-term inflation, the end of next year. So you can read all about that for yourself. on page 8, paragraph 3 and paragraph 5. So basically read all of page 8. If you need help understanding it, because it is above 12th grade English, it's nothing to be ashamed of. You haven't gone to school for finance. They're going to be talking in an extension of English. Just copy paste page 8, put it into ChatGPT or Grok and say, hey man, break this down for me. I'm a real estate agent. I'm a doctor, not a stockbroker, right? Explain this to me. And it will break it down for you so you can get what the Fed is saying. Because what they're saying is this. We're going to bottom out and then consolidate. And just to emphasize this, Michael's strategy is doing that. They're buying bonds. So a lot of good stuff coming out inside VIP, particularly if you're not an American and you're able to short sell, as we'll be getting ready to short trade the next leg down on Bitcoin, timing it flawlessly using macroeconomics. And we'll be formulating this checklist, a lot like the 24-point checklist on how to swing trade, how to vet these projects, what to look at, etc. We're going to do one for swing trading to prevent top blasting, to get you in the best positions, to maximize profit. All right, guys. Thanks for checking out this video. We'll catch you on the next one.